Basil Read has reported an 80% drop, or nearly 80% drop, in its first half headline earnings per share to 14.75 cents. Revenue, however, increased by 13%, now sitting at 3.3 billion rand. The company cited a challenging trading environment with ongoing uncertainty and volatility in both local and global markets as key hindrances to its financial performance. No dividend was declared. In studio with us, Basil Read CEO Marius Heyns for more on the numbers. Welcome, Marius. And I just have to tell viewers that we were talking about the dismal results, and Marius says it's not all doom and gloom. So just do tell us, what's the highlight here?
I think the construction sector has now been plagued by contractual issues. You know, we believe we're doing a good job in providing clients with a service, and then it turns into an argument whether they should pay you for that service. And we've been very prudent as contractors, because in the past, as you've seen previously with Marius, they've delayed to declare some of their so-called claims. We've just taken none of our claims into our results, and those claims are in excess of 300 million. So eventually those will have to come off. So
you're saying conservative stance, and that explains the divergence between revenue and headline earnings?
Yeah, if you look at our mining side, we're coming in at nearly 8%, our engineering 8% operating margins. So they are in line with previous years, and and our order book is there. The work is out there. It's just still aggressive tendering.
Yeah.
But we have some very nice contracts in the pipeline. And I believe we're going to win quite a bit of our contractual claims.
Oh, you have to believe that. Oh,
no,
your contractual claims, you
well,
say.
We've been awarded already in adjudication. We've been awarded in excess of 140 million. We have not taken it into our result.
Okay. So that's going to be a sweetener for the second half?
It'll be a sweetener, because the client has already indicated he wants to go to arbitration. And this is an environment that we have to ride out. You must remember, in the World Cup, it was a lot of work around. Stuff had to be finished. People didn't care how much money was thrown at it. Now everybody's counting the pennies.
So you're keeping your lawyers close by?
We're spending more money on lawyers now than ever before.
Let me ask you about the Free State Roads Department. End of July, it was published. You've settled. Have they paid anything?
We have settled, and yes, they paid a portion of it. Obviously, they're still finding it difficult to find some funding. They have indicated that Treasury could assist them, but again, it hasn't materialized. But at least we've got a commitment in writing, and so it makes us a lot more happy, and our investors.
Marius, on that point then, our markets commentator pointed out, we're all waiting for this infrastructural boom to pick up, but if you hear stories like this, the Free State Roads Department can't pay, how on earth is government going to pay?
Byron was very accurate. He said two things. He said it's a contractual environment now where we are fighting in courts to get our money, and secondly, the government doesn't pay. And that's one of the reasons why we have debt, because we had to raise some bonds to help us cover some of those negative cash flows coming from government. And but subsequently, slowly but surely it's coming. We're not quite exactly sure what is the problem. Why is the money flowing so slow from government?
What's your theory?
I think it's an administrative problem, more than, because Treasury has gotten involved everywhere in government now to make sure that there's proper governance in terms of payments, and so it's a good thing, but it's bad for us, because it's a struggle to get your money. It's delay, because they are obviously investigating, making sure that the monies that has been paid and still being paid is legit, and so it's good for the country, but it's bad for us as contractors, because it is a struggle to get our money.
So what's going to be the turning point, the trigger? I mean, the question we're all asking ourselves is, can it get worse? Because the numbers keep going down for the entire sector.
I believe really now, from a Basil Read point of view, we've turned the bottom. I cannot speak for my competitors, but if I look at what has happened there, we've all taken a similar stance to really be very conservative, clean out the cupboards, not to have any skeletons there anymore. And I believe government is sincere about rolling out, and the more seminars and conferences we're attending, we can see that it's coming, and it's getting closer to the point. I just want to point out, we are still tendering for somewhere between 30 and 40 billion rand every 12 months that we're putting in tenders. So the amount of work that's out there hasn't really reduced. But because there was such a flood of work during the World Cup, obviously capacity has been built and everybody is still. But the contractors has raised their margins. We've all sanity is beginning to prevail.
Can we talk about that? Because your margins in this set of results at 1.2%.
Yeah, but I think it's a skewed, so it's very, very, you know, we're hoping to get back to about a 4.5–5% operating margin for construction again, you know, in early next year. As you can see, the mining and engineering, and our engineering is very much related to the mining as well.
This is TWP that you bought about a year ago?
Yeah, obviously we have a very large mining contract, Merwe, which is in a joint venture with Leighton's contractors from Australia in Botswana. And so that result has not been put in our mining result. It's under special project. So, you know, our mining has actually fared well because that should really go under their results. So it's probably, our mining is achieving a 10% operating margin at the moment.
Marius, very briefly, just remind me of your geographic diversification. Where are you outside of South Africa, and is that helping you?
Yes, but it's got its own challenges because, you know...
Other ones.
It's the Africa factor where you have to be very prudent, but the work is coming, mostly from private clients. But, you know, again, we're struggling with a private client that we built a railway line for in Africa to pay us at the moment, and it's a London-listed company. So it's not just government that we're struggling with, it's just the environment. I think it's an economic environment. Those clients have cash flow problems as well. They have to deliver mining projects. You know, they've got to get whether it's iron ore or gold, they've got to get it out. And their investors only come on board when there's a certain tonnage that's been delivered, so it's difficult.
Marius, there's a twinkle in your eye. 6 months from now, will it be even a more boisterous look in your eyes?
I'm either fired or I'm going to sit and smile at you.
Good, so you're hoping for good news then?
I'm hoping for good news.
Marius, thank you. Thanks for coming in.
Thanks, Erika.
It was Marius Heyns, CEO of Basil Read, which reported first half results today.